Hello everyone and welcome to today's lecture. So today what we are going to do is we are going to cover the SA 500 series, rest of the SA 500 series, and as I'll reiterate again that we will be covering the questions and the practical side of the SA 500 series. For that, I expect that you guys should have watched the previous lecture. Should have gone through the material. You should have gone through, the notes, whatever you have, and you are here with your doubts and some clarity about the topic. So that once we are discussing the questions, then it will be very easy for you guys to understand the concept, to apply the concept. Okay, then only it will be helpful for you to understand in detail that how the questions are coming in the exam, how you can answer to the questions, and how to apply a particular standard in a practical way. Okay, so I please request that please, whenever the next lectures are, before start of the lecture, uh, look into the previous recorded lectures, look into the study material, read the study material for that particular standards, come up with your doubts so that you can participate more, you can learn more from this. Okay, so let's start for the today's session. And considering this is a very important topic, because you can see the marks, the weightage it carries, the number of standards it says, the number of lectures, the number of chapters it covers in the study module itself. It's very important from that point of view also. Okay, so let's start the today's lecture. Okay, so what I'm going to do is I will be covering first a good question. It's a kind of a case study sort of. Okay, and then based on that question, we will deep dive in the concepts of various standards. Okay, so let's start. So first, Mr. Ishan, audit manager on the audit of Best Works Private Limited, has performed the below risk assessment for vendor payment process. Okay, now this is the vendor payment process. Now these are the 4 risks that has been identified. 1, incorrect vendor payment processed, untimely vendor payment processed, unauthorized vendor payment process, and excess vendors payments to vendors. Now appropriate risk rating has been given: high, medium, and low, and the risk assessment has been performed on an assertion level. So remember, in SA 315 we are not required to only perform risk assessment at a financial statement whole, but we are required to perform the risk assessment at an assertion level also for a particular class of account balance or a presentation or disclosure. So the same has been done over here. Okay, so appropriate assertions has been marked for the risk assessment. Now in front of there are certain controls which are mapped over here. Okay, so the first control is that all invoices due on the parent date are extracted from the system to prepare the parent by the API payments executive, and appropriate adjustments are made for advance and blocked invoice. An independent person from AP payments team, other than the preparer of parent, reviews the working of the parent before being paid. Same way, for the untimely vendor payment process, the control is before uploading the parent into bank site, the vendor master team verifies the due date by recalculating it through the credit terms in vendor master and invoice date. For unauthorized vendor payments, the control is all parents prepared will be approved by vendor master team and independent reviewer before being processed for payments. And for the excess payments to vendor, the control is during preparation of parent, an advance list is expected by the invoice processing executive to verify whether any advance is required to be adjusted against any due invoices. This is a list and adjustments are verified, reviewed by an independent reviewer. Okay, so we have a reviewing mechanisms, control in place for these risks. Okay, good. Now let's see the other information which is given. Okay, the first information: during testing control over excess payment to vendor, Mr. Ishan identified out of 25 samples picked for testing. Okay, 25 samples picked for testing. In 2 instances, the invoice process executive missed adjusting the advance, amounting to 2.5 lakhs in total. standing against the invoice due for payment. The same was also not identified during the independent reviewer review of the advance list. This expected rate of deviation in the expected rate of deviation in control was 0. That is, no deviation was expected or to be found in the control. Okay. Now, based on this, before we go to the next point, let's do one question. Okay. After projecting the misstatement for the deviations identified in control, Mr. Ishan observed that the total projected misstatement is below tolerable rate of deviation. Hence, Mr. Ishan concluded that the control is operating effectively. So, for this particular control, Mr. Ishan is saying that the projected misstatement is below tolerable rate of deviation. Now, two things I would like to ask from you guys. Number one, what is tolerable rate of deviation? What do you mean by tolerable rate of deviation? Come on, guys. Let us see now the concepts over here. What is a tolerable rate of deviation? Okay, good, Namrata. So, what is tolerable rate of deviation? Come on, guys. Now we will see the application of some of the concepts from, I could say, SA 530, SA 330, 315 into a practical example. Come on, guys, I'm waiting for your answer. What do you mean by tolerable rate of deviation? Very important thing. When you are doing, you are talking about control testing, it's very, very important point. My tolerable rate of deviation, what is that? Okay. Not, no, Janvi. Actually, it's only the first part that you are saying. So the first part of your answer is the tolerable rate of deviation. Okay. So when I say a tolerable rate of deviation, that is nothing but a limit, a threshold, you can say, okay, up to which, okay, if I find any deviation in the internal control procedures, okay, if I find any deviation up to that particular level, then that is not exceeded, so if that is not exceeded, then I could say, okay, there is no issue to, impact or to say that my control was not operating effectively. Basically, a tolerable rate of deviation is the rate of deviation, okay, which is prescribed by the auditor only. Okay. Now, for example, I could say there is a tolerable rate of deviation of 5%. Means up to 5%, I can tolerate the deviation in this particular control. Okay. Up to 5%, I can tolerate the deviation in this particular control, or with other components of this particular control or this particular process, I can tolerate deviation up to 5%, but not more than that. If it goes more than that, then I need to think about the other procedures that I need to perform, because the deviations that has been identified are going more over and above the limit, this threshold which I have set. Okay. And in order to get the appropriate level of assurance from the testing, this should not exceed the actual rate of deviation, should not exceed the deviation rate that is set by the auditor. That's a tolerable rate of deviation. Okay. So tolerable rate of deviation is something, a rate which is set by an auditor, which is an expected from that particular control or process, the rate of the deviation. Okay. Now, Mr. Ishan observed that the total projected misstatement is below the tolerable rate of deviation. Hence, Mr. Ishan concluded that the control is operating effectively. Mr. Manoj, the audit manager, had a different opinion. Kindly guide both in respect of identified misstatement in the testing of control by selecting appropriate option from below. Now, before I go to the options, I want to understand from your side. Audit manager was not happy here because he had a different opinion. Mr. Ishan concluded that the control is operating effectively. Now you tell me whether the control is operating effectively or not. So in the control itself, what happened is Mr. Ishan identified two instances. Okay. Mr. Ishan identified two instances wherein executive missed adjusting the advance amounting to this much amount, 2.5 lakhs in total. Okay, in total. And it was out of 25 samples. And after projecting the misstatement in the below, after projecting the misstatement, okay, the Mr. Ishan concluded that it's below tolerable rate of deviation. Do you think the control should be classified as not operating effectively, or the control should be concluded as operating effectively? Come on, guys. Read it carefully, because this is something, is about evaluating the misstatement identified during testing. And this happens. Evaluation of the misstatement is a very important thing. Come on, guys. Do you think the control is operating effectively? Absolutely correct, Janvi. Well done. Come on, guys. Do you think the control is operating effectively? Yes or no? Of control testing, then based on that you need to understand how to evaluate the results of test of controls, key terms, key concepts like tolerable misstatement, projection of misstatement. So Pranav, information has been given in the question about this. As I'll recommend again to read the testing, this paragraph. Can I say the control is operating effectively? Come on, guys, I'm waiting for your answer. Do you think the control is operating effectively or not? If yes, then why? If no, then why? I'll suggest please read it, how the testing is being performed, what is projected misstatement from the control, what is tolerable rate of deviation or expected misstatement, and then accordingly evaluate the results. Absolutely correct, Purvi. Good, Namrata. Okay, let's see the answer. First of all, before I go to the answer, how do you project? I want another question. Before I go to the answer, one another question. How do you project misstatements in test of controls? How do you project misstatements in test of controls? Okay. So if you identified any misstatement during test of controls, how will you project misstatement? I have a test of control over here. I have identified the amount. How will I project this misstatement? If I have to project misstatement, how will I do? POC, projection of misstatement. How will I project misstatement from identified during test of control? Come on, guys. Projection of misstatement for the misstatement identified during test of control. How will you do that? Okay, good, Janvi. How will I project misstatement from for the misstatement which are identified in the test of control? Okay, so Ms. Prajapati, how will you project the misstatement like 2 identified from 25 samples? How will you project for that whole population? So I have identified 2 instances of missed adjusting the advance, okay, out of 25 samples amounting to 2.5 lakh in total. How will I project this in front of whole population? Let's say, for example, for the sake of clarification, I'll give you. Let's say population is 25 crores. Total population total. Population total 25 crores. How will you project? And let's say sample total was rupees 2 crores. The total of sample was 2 crores and the total of population is 25 crores. How will you project the misstatement? Now it should be easy. I have given some additional information also. If you want to project, how will you project the misstatement identified in the test of controls based on the given information? Come on, guys. Awaiting your answers. I have total 2 samples where the total misstatement was 2.5 lakh rupees out of 25 samples. Let's assume the sample total was 2 crores and the population total is 25 crores. If I have to project the misstatement for the misstatement identified in the test of controls, how will I do that? It appears that you guys have not gone through the previous lectures. That is not good. Okay, okay. Ms. Prajapati, good, good. Okay, let me show you. So the answer is, with respect to the projecting misstatement from the test of control, we don't project. There is no projection required for the misstatement identified from the test of controls. Now, what is the reason? The reason is that the expected rate of deviation that I am setting up here is the rate over the population itself. Understand the concept. The expected rate of deviation that has been set over here, this one, this expected rate of deviation is on the population itself. Hence, there is no requirement to project the misstatement because I'm comparing the misstatement identified with the misstatement rate which was set on the population. So if I today say 5% is the expected rate of deviation, the 5% is set on the total population based on the total population itself. Hence, there is no need to project the misstatement in test of controls. The moment you will project, you are wrong. It's not a monetary amount, it's not a monetary terms. When I identify a misstatement in test of controls, it's rather in the nature of a deficiency or an attribute than the monetary amount. Understand? A deficiency or an attribute which is missed in the control doesn't mean that it will always be a misstatement. Okay. So if the executive missed adjusting the advance, he could have adjusted the advance in coming payment run. He could have adjusted the advance in subsequent payment runs. So, and I might not have a misstatement or excess payment. Let's say, for example, they have made a payment, excess payment to a vendor. If the payments are genuine, if adjusting advance was missed, okay, on a good faith ground, there is no, fraudulent intention in that, then it's not a misstatement. Adjusting advance, paying advance amount to a vendor doesn't mean it's a misstatement. So definition of misstatement, you need to define it. That, okay, what is a misstatement for a particular item? Okay, my balance is not appropriately reflected, but when I paid excess amount, the excess should reflect, and that's the appropriate amount. And that's the appropriate way of disclosing.
Disclosed by Junkie Excel from Spotify.
Access stop. Sorry. So that is the main thing over here. Okay. Basically, I do not project the misstatement, and in the current case itself, the total projected misstatement, that is the first thing Mr. Ishan has done wrong. He shouldn't have projected the misstatement. Okay, and he's saying that that's a below tolerable rate of deviation. I don't have a tolerable rate of deviation here. My tolerable rate of deviation is 0. That the expected rate of deviation in this control is 0. In that case, if I identified a single sample that is not meeting the attributes that I'm testing for a control, in that case, that is a problem for me. That is a control that is not operating effectively, and I have a problem on that. Okay, that's why the Mr. Manoj, the audit manager, has a different opinion. He's correct. Let's see the options over here. For the test of controls, explicit projection of deviation is necessary since the sample deviation rate is not the projected rate of deviation for the population as a whole. For the test of control, no explicit projection of deviation is necessary since the sample deviation rate is the projected deviation rate for the population as a whole. The auditor is required to project misstatement for the population to obtain a broad view of the scale of misstatement, but this projection may not be sufficient to determine the amount to be recorded. The auditor is not required to project monetary misstatement for the population to obtain a broad view of the scale of misstatement, as the actual projection will be sufficient to determine an amount to be recorded as misstatement. So what do you think is the correct option over here? What do you think is the correct option? A, B, C, D. Good, Namrata. Okay. Good, Miss Prajapati. Okay. Good, Janvi. Come on, guys. What is the correct option? After all this discussion, now you need to select the correct option. I gave you the answer. You just need to select that. I will see the answer from Namrata, Purriben, and Janvi. Okay. Let us see. So, option 1. The test of controls, explicit projection. For the test of control, explicit projection or deviation is necessary. That is wrong. I do not need projection for the test of controls. That is incorrect. Explicit projection is necessary. No, it's not necessary. Hence, the option 1 itself is correct. I'll not choose option 1. Option D. For test of control, no explicit projection of deviation is necessary since the sample deviation rate is also the projected rate for the population as a whole. Think the same thing which I told you. As of now, it is appearing correct. I will not do anything. But let's see the other options. The auditor is required to project misstatement for the population to obtain a broad view of the scale of misstatement. I am not required to project the misstatement for the test of controls. The auditor is not required to project the misstatement for the population in test of controls. Hence, this is again incorrect. D. The auditor is not required to project monetary misstatement that for the population to obtain a broad view of the scale of misstatement, as the actual projection will be sufficient to determine the amount to be recorded as a misstatement. Number 1. We are not talking about the projected misstatement or monetary misstatement. Monetary misstatements come from the test of detail, and there you require projection. So when I say projection of monetary misstatement, it goes to the test of details, not the test of the controls. Number 2, as the if you read the second line, as the actual projection will be sufficient. Again, projection is not required in the test of controls at all. If you see projection, it's wrong. Projection will be sufficient. No, we are not required to do projection. Incorrect. So the correct option is B. For test of control, no explicit projection of deviation is necessary, since the sample deviation rate itself is on the population, the projected deviation for the population. So whatever I'll get it, I'll compare it with my expected rate of deviation. That's a tolerable limit. Again, sample deviation rate, the rate that is, I'm expecting that, there will be a deviation, tolerable rate of deviation is also the projected deviation rate for the population, because I calculate a percentage, 5%, 10%. Okay, I calculate a percent or 2.5%, there will be a deviation of 2.5%. When I say deviation of 2.5%, it's on the sample or on the population. It should be the same. If I say 0% deviation, I am expecting no deviations. 0% deviation means I'm expecting no deviation in the population itself, in the sample itself, from anywhere. It's same in the test of controls. It's not a different. I hope I'm clear. So this question on a standalone basis clarifies your concept of tolerable rate of deviations, projection of misstatement from the test of controls, and how you evaluate the misstatements identified during test of controls. Rather than how you evaluate the deviations. I'll not use the word misstatement, but I'll use the word deviation. Okay. Now let us see the second point. Again, during the test of control over the risk of unauthorized vendor process, payment process. So this was the unauthorized vendor payments process, and the control was that all pay runs prepared will be approved by the vendor master team and independent reviewer before being processed for payments. So there is an approval requirement. Okay. Now, during the testing of this particular control, Mr. Ishan identified that out of 25 samples tested for authorization, in 3 instances, the authorization from vendor master team was obtained after processing the payments. So there was a delayed approval. However, approvals from the independent reviewer was obtained prior to processing of payments. Now again, the control said that they require 2 levels of approvals. One from vendor master. Second, they require independent reviewers approval. 2 levels of approvals. But when they tested the control, they identified 3 instances where there was a delay approval from the vendor master. Now let us see the question. With respect to the delayed approval, Mr. Ishan concluded that the identified deviation is more than the tolerable rate of deviation. Hence, the control is not operating effectively. And there is significant deficiency in the internal controls that require to be reported to those charged with governance. Considering all other internal controls within the same process were identified as operating effectively, kindly guide Mr. Ishan with respect to the evaluation of deviations by selecting the appropriate option from below. So, Mr. Ishan is saying that control is not operating effectively. There is a significant deficiency in the internal controls that is required to be reported to those charged with governance. Considering all other internal controls were identified as operating effectively. Now you tell me whether this particular observation that has been identified, there was a delayed authorization, will you classify as a significant deficiency? And first, before I go to the classification, whether it's a deficiency or not, what do we mean by deficiency? Deficiency in internal control. What do we mean by deficiency in internal control? Come on, guys. What is the deviation? Jani, with respect to your question, just wait for this question. Okay, wait for this particular thing. I'll explain your questions in this only because that's somewhere linked on linked. So I have received your questions. I will be explaining while explaining this particular question. Okay, guys, what is the deficiency? When I say deficiency in the internal control, what do you mean by deficiency? Come on, guys, I'm waiting for your answer. What do you mean by deficiency? Okay, good, Purvi back. Okay, good, January. Okay, good, Namrata. So, when I talk about the deficiency, I refer to SA 265 that talks about the definition of deficiency in internal control that says that the deficiency in the internal control exists when a control is designed, implemented, or operated in such a way that it is unable to prevent, detect, and correct misstatement in the financial statements. Okay, misstatement in the financial statement. Second, or a control necessary to prevent, detect, or correct misstatement in the financial statement on the timely basis is missing. So either the control is not able to prevent misstatement, either a control is not at all present to avoid, to detect the misstatement or to prevent the misstatement. Now, my question is whether this particular deviation that we have identified is deficiency in this control, in this particular control, second number, can I say deviation? Okay, can I say that the deviation is equal to my deficiency in internal control? Can I say deviation is equal to deficiency in this particular case? Come on, guys. Can I say that my deviation in this particular control is equal to a deficiency or not? I have another information within the question itself. See, he identified the deviations are more than the tolerable rate of deviations. Considering all other internal controls were identified as operating effectively. Can I consider this deviation as a deficiency? Okay, good, Namrata. Come on, guys. Can I say this control, the deviation I identified in this control is equal to the deficiency in the internal control? Correct, Namrata. But will I call that a deficiency? Again, the deficiency statement or the definition is a control designed, implemented, and operated in such a way that it is unable to prevent, detect, and correct misstatement in the financial statement on a timely basis. Come on, guys. Can I call this as a deficiency? Okay, good to event. Okay, now if I call this control, this deviation as a deficiency in the internal control, okay, deficiency in the internal control, then what will this constitute as a significant deficiency? Will this become a significant deficiency then? Because I have identified 3 samples in this particular one. If I say deviation is a deficiency, can I say these 3 instances are resulting in a significant deficiency? Can I say this is a significant deficiency or not? Now, earlier I was talking about deficiency. Now, my question is, can this be termed as a significant deficiency? Can this be termed as a significant deficiency? Okay, good, Janvi. Good, Puriben. Come on, guys. Can I term this deviation as a significant deficiency? Okay. Now let me explain a brief concept about the deficiencies. First of all, deviation is not equal to deficiency. Remember that. Deviation is not equal to deficiency. No. In most of the cases, deviations can be there. That's why we have an expected or tolerable rate of deviations. If deviations are within the tolerable rate itself, I cannot say that the deviation is equal to deficiency. Simple. If I was expecting a deviation of, let's say, 5% in a sample, and if the deviations are within 5%, I'm fine with that. I was expecting that. And that's why my deviation will not become a deficiency. Okay. Now, when the deviations are more than the expected rate of deviation, I could say the control is not operating effectively. Hence, there is a deficiency in the control. So I agree with the in that case, if the actual misstatement is greater than tolerable rate, then I could say that deviations can be equal to deficiency. Okay, can be equal to deficiency if that's the case. Now, when a deficiency will become significant deficiency, so when, okay, if you read the essay 265, that's talk about that communicating deficiencies in internal control with those charged with governance. Okay, if you read the essay 265, it clearly specifies when I will call a significant deficiency. Significant deficiency in the internal control is a deficiency or combination of deficiencies in internal control that in auditor's professional judgment is sufficient important to merit the attention of those charged with governance. Means one or more deficiencies in the internal control together are of such nature that that requires attention of those charged with governance. If I go to those charged with governance and say, okay, in 3 instances there is a delayed approval, everything is fine. In 3 instances it's a delayed approval. I cannot say this is significant deficiency. Number 1, approval was delayed. It was not on a timely basis. There is a risk. There was a deficiency and deviation I identified. But if you see in the question itself, it says that considering all other controls were identified as operating effectively. And I'm not sure, have you gone through the previous lecture on the risk assessment, but unauthorized vendor payment has a risk on occurrence assertion, but on the same assertion for the accounts payable balance or account that particular for that particular class of transactions, that is account payables, I am getting a comfort from this control over an occurrence and existence assertion which is there in front of this risk. So a mitigating control is already on the place which requires an approval. Okay, so a mitigating control is there from where I'm getting to some extent I'm getting a comfort. That's why I gave this risk assessment details. So when unauthorized vendor payment process is risk on the occurrence or existence, I agree. That's why there is an approval control on that. But there is another control, approval control, okay, which is giving me comfort on the same assertion, which is with respect to the risk of incorrect vendor payment process. In that case, I am getting some comfort from the other controls which are operating effectively, and hence I will not call this deficiency as significant deficiency. So this is not the significant deficiency. Okay, let us see the answers or options basically. Option 1. In assessing the tolerable rate of deviation, the auditor should consider that while deviations from a pertinent control increase the risk of material misstatement in the accounting records, such deviations do not necessarily result in misstatement. Deviations would result in misstatement in accounting records only if the deviations and the misstatement occurred on the same transaction. The auditor is required to project deficiencies, project misstatement for the population to obtain a broad view of the scale of misstatement, but this projection may not be sufficient to determine an amount to be recorded. When the auditor discovers more deficiency than the planned, the test objective is generally not met. At this point, the auditor cannot conclude the control is not effective. When a risk of material misstatement is addressed solely by one control, the control generally needs to be more reliable and the auditor can plan higher tolerable misstatement for the same control. So what do you think is the correct option? Come on, guys. What do you think is the correct option? Good for you, Ben. Come on, guys. I'm waiting for your answer. What do you think is the correct option in the current case? Let's see the answers. So the first option was, in assessing tolerable rate of deviation, the auditor should consider that while deviations from the pertinent control increase the risk of material misstatement in the accounting records, such deviation do not necessarily result in misstatement. So just now we saw that deviations can be equal to deficiency. Can it be equal to misstatement? Can I say deviation is equal to misstatement? Very important things. These are the basic concepts. We use these terms interchangeably, but they are not. Can I say a deviation is equal to misstatement? I can say, okay, deviation is equal to, deficiency, provided there is one condition to it. Okay, condition is actual rate of deviation is greater than tolerable rate. If that is the case, then I could say, okay, that's fine. The deviation will become deficiency. Can I say deviation is equal to misstatement? So deviations and misstatement, okay, there are two separate things. Not necessarily the deviation is a misstatement, but if in a particular transaction, if in a particular sample, if there is a deviation and a misstatement together, then only I could say there is a misstatement in the transaction. Delayed approval is not a misstatement in the financial statement. Okay, delayed approval is not a misstatement, rather it could give rise to the risk of material misstatement. But I won't say that, okay, it's a misstatement because there's a delayed approval. No. So the deviations and misstatement are different. They are not equal. Okay. Deviation and misstatement are not equal. If in a particular transaction I identify a misstatement, along with the deviation, then only I could say, okay, there is a misstatement. Otherwise, a deviation can increase the risk of material misstatement, but not the misstatement itself. Okay, so this particular point, the control increase the risk of material deviation from a particular control, increase the risk of material misstatement in the accounting records. Such deviations do not necessarily result in a misstatement. Very important. A deviation may increase risk of material misstatement, but it itself will not be a misstatement. Deviations would result in misstatement in accounting records only if deviations and the misstatement occur on the same transaction. That's the correct and appears to be correct as of now. Second, the auditor is required to project misstatement for the population to obtain a broad view of the scale of misstatement. We are not talking about projection here. Plus, in the control, there is no projection. That is not correct. Third, when auditor discovers more deviation than the planned for, the test objective is generally not met. That is true. At that point, the auditor cannot conclude the control is not effective. Sorry, I can conclude. If I have higher deviations than the planned one, I can conclude the control is not effective. The auditor cannot is incorrect. The auditor can conclude the control is not effective. Hence, this is incorrect. When a risk of material misstatement is addressed only by one control, the control generally needs to be more reliable. That is fine. That is true. And the auditor can plan higher tolerable misstatement for the control. That is incorrect. If I need more assurance from a particular control when I'm relying, when I'm relying on a particular control on a higher side, I need more assurance, more evidence from that particular control. The more the assurance need, the more the evidence need, the lower the tolerable rate of misstatement will be, not the higher. So if I'm relying solely on one control, my tolerable rate of misstatement should be lower, not the higher. And planning higher rate of tolerable misstatement for the same control is not appropriate in that case. Clear? Any doubt? Okay, so now there was a question. What do we mean by statement that the misstatement is within the tolerable misstatement limit? So, when I talk about misstatements usually come from these test of details. And when I talk about test of controls, we use the word deviations. When the deviations are more than the tolerable rate of deviation, it becomes a deficiency. And when one or more deficiencies are there, it becomes significant deficiency. In the test of details, when I identify there is something not appropriate, I call that as a mistake. And for each transaction, for each misstatement, I project misstatement on the population, because in the test of details, whatever misstatement I have identified in the front of the samples that have been selected. So the misstatement is from the sample. Let's say I tested 25 samples for a particular class of transaction. In test of details, I identified some misstatement, monetary misstatements. In that case, I'll project that onto the population. I'll see what is the tolerable rate of misstatement whole for the population that I have set. Okay. The tolerable rate of misstatement for a population in test of detail means a level of monetary threshold. Okay. A monetary threshold that I have defined, that if I identify misstatement in testing below this level, it's fine for me. I'll not change my plan procedures. I'll not change my risk assessment procedure. I'll not perform any additional procedure. But if the actual misstatement or the projected misstatement goes beyond the tolerable rate of misstatement, then in that case, I might need to revise my procedures. That is the tolerable misstatement level for the test of detail. Clear? Any doubt? So these are the concepts which are coming from SA 265, SA 315, SA 530, okay, plus SA 330. This particular will also be applicable for internal will also be applicable for internal financial controls over financial reporting, IFCFR. So when we do testing for reporting for internal financial control over financial reporting, at that particular point in time, also these concepts are valid. Clear? Any doubt? So there is one doubt. What is anomaly as per SA 530? Okay. If I talk about anomaly, okay, anomaly means particular, I could say deviation or a particular, misstatement sort of, but it is of that nature, okay, that is one of its kind, and it's not representative of whole population itself. For example, let's say in this case, in 3 instances, there was a delay, technical issue present in the system. Like let's say, for example, the approval were going through the system. However, in one instance, there was a scenario that the person was not able to approve in the system because of the technical errors or technical issue. Now that's an anomaly because this does not represent the whole population. Means you do not have a technical issue at every point in time. The person was willing to perform, but there was something which was not allowing him to perform because of a technical issue. That is one of the kind throughout the year. Okay. And hence this can be considered as an anomaly rather than a deviation. So anomalies are deviations or misstatement, but they are of such nature that they do not represent the whole population. Clear? I hope Janvi is this clear. Any doubt? Okay. If no doubts, then let's see next question. Now, the next question is, assuming the adjustment of advance against the due invoices selected in the pay run was an automated control. Kindly guide Mr. Ishan with respect to the testing of automated controls. How do you test the automated controls? When I ask you in simple terms, okay, tell me how do you test automated controls? Let's say this is not a manual control. This is an automated control which is performed by the system. That system knocks off the advances against the outstanding invoices. How will you test that particular control? How do you test an automated control? Okay. Do I need to test the automated control in the way I do test manual controls? Simple. So first question is testing of automated control is done in same way testing of manual? Are both tested same? Like I'll take 25 samples here and 25 samples here to test. What do you think? Do I test automated controls in the way that I test manual controls? Okay, Namrata. Okay, Purvi Ben. Good. Good, Janvi. Very good. Very important. Testing of automated controls. How many samples I am required to take to test the automated controls? Is 25 sufficient? How many samples I am required to take to test the automated controls? Whether it is 25 or more than 25. Good, Purvi. Good, Janvi. Good, Purvi Ben. Am I required to take 25 samples to test the automated control? Good, Purvi Ben. How many samples? Come on, guys. How many samples I'm required to take to test the automated controls? How many samples do I need to take? How many samples I need to test? Come on, guys. If I'm testing automated controls, how many samples do I need to test? How many samples do I need to test the automated control? Okay. If it is less than 25, then how much? How many? Can give me a range? Can you give me a range? Okay, I'll give you the option. 1, 2, 3, 4. These are the options. Okay. Like option number 1 or okay, let me write it down ABCD. It will not confuse. Let's say option A 1, option B 10 to 15, option C 15 to 20, option D 20 to 25. So you have 4 options. How many samples you are required to test? Okay, good, Janvi. Come on, guys. How many samples you will test for an automated control? Let's say it has the same level of risk that we were seeing as of now, medium, not the higher. So it's a medium risk. Okay. Till now, for the medium, we were taking 25 samples over here. Out of 25 samples, 25 samples, because the risk was medium or low. Okay. Assume the risk is medium here in this scenario also. How many samples you will take? Absolutely correct, Purviven. Good. Well done, Purviven. Good. How many samples I will take to test an automated control of the same level of risk, that is the medium. So this control, let's say, has a medium risk. I'm expecting more answers, guys, over here. Absolutely correct, Purviven. Janvi, can you explain why, like the reason behind your option? Okay, let me tell you. When I'm testing an automated control, the sample size that I need to take is not option D, is not option C, is not option B. It is the option A, only one sample. I'll tell you why, the logic behind. In case of automated control, what I need to do, I need to understand the logic, and I need to understand whether it is operating effectively for that particular logic is appropriate. Okay, that is designed well to operate effectively. So what I need to understand from that one particular sample is whether that particular automated control is designed effectively to operate effectively with one sample. That means I need to see whether the design of that automatic control, the logic, is designed in such a way that it can operate appropriately, effectively every time without any intervention. That's an automated control. So whether the control is designed effectively to operate effectively, if yes, if I got my answer yes from that one sample, then this control will consistently perform itself. Okay, this control will consistently perform itself because the IT logic does not change unless and until someone changes it. It will be performed in the same way it got performed for the one sample. If I'm comfortable with the one sample, it will perform in the same way till the time the logic is not changed. And hence, the consistently performance of this controls give me comfort by testing one sample. Let's see the answer. Now, SA 330, the auditor's response to assess risk, because of the inherent consistency of the IT processing, it may not be necessary to increase the extent of testing of an automated control. An automated control can be expected to function consistently unless the program, including the table files or other permanent data used by the program, is changed. Unless the program is changed, it will function consistently. Once the auditor determines that an automated control is functioning as intended, okay, which could be done at the time of either, control is initially implemented or at some other day based on my testing. Okay. The auditor may consider performing tests to determine the control continues to perform effectively. Such tests might include determining that changes to the program are not made without being subject to appropriate program change controls. The authorized version of the program is used for processing transactions. Other general controls are effective. I am not testing any sample over here. But what I'm testing is about changes in the program. Okay. The program which is used is authorized version. And other general controls. IT general controls are effective. If these things are proper, then why I need to test again and again the same samples? There is no need to test the samples of 25, 10, 15 in the case of automated controls. Such tests might also include determining the changes to the program have not been made, as the case may be when the entity used packaged software application without modifying or maintaining them. For example, the auditor may inspect the records of administration of IT security to obtain audit evidence that the unauthorized access has not occurred during the period. That is enough for me. So for the test of automated controls, I'll not go and test 10, 15 or 20 samples. Rather, I will be getting comfort from only one single sample. Well, I'll understand the logic and I'll establish that the control is designed effectively to operate effectively. Simple. Any doubt? Any doubt till now? I hope you understood the answer here. Any doubt, guys? Okay. If no doubt, I suggest let's take a quick 10-minute break and we'll gather back after the break. Okay, let's take a quick 10-minute break. Started. Okay. Hello everyone, welcome back. Let's continue the discussions. Okay. Now another question on the same line for the controls. It's on the testing area. Okay. Let's see the additional information given. So the additional information that is given is during the test of control over the risk of unauthorized vendor payment processed, Mr. Ishan performed interim testing for 9 months by selecting 20 samples of pay runs and tested relevant control attributes. No errors or deviations were identified in the testing. So Mr. Ishan tested for 9 months. Okay, he performed interim testing by selecting 20 samples. No errors and deviations were identified during that particular test. That is fine. Now let us see the question here. While planning for the roll forward testing, Mr. Ishan was of the view that he needs to test the full sample size again at the period end. As in the control testing, no reliance can be placed on the testing performed at the entering period. Kindly guide Mr. Ishan with respect to the reliance that can be placed on control testing performed at the entering period. So you tell me whether he needs to test the full sample size again at the period end or he shouldn't. Can he place reliance or he cannot place any reliance on the testing performed at the entering period? So what is the requirement with respect to the testing which is performed at the entering period? Can he place reliance or not? Do we need to test full sample size again? Come on, guys. He needs to test full sample size again, or can he place reliance on the testing which he has done already for the 9 months? It's not the test of details, it's the test of control. Remember that. This is not the test of detail, this is test of control. Can he place reliance? Come on, guys. Good, Purviben. Let us see the answer. Usually when I'm testing at the interim, I need to test at the roll forward, but the quantum of the roll forward depends upon the testing performed at the interim. Okay. So when auditor is obtaining evidence about the operating effectiveness of controls during an interim period, the auditor shall obtain evidence about significant changes to those controls subsequent to the interim period. Number 2, he needs to determine the additional audit evidence needed to be obtained for the remaining period. Now, relevant factors in determining what additional audit evidence to be obtained about the controls that were operating during the period remaining after an interim period include the significance of the assessed risk of material misstatement at the accession level, that how much risk is there, the specified controls that were tested during the interim period, and the significant changes to them since they were tested, including information system, processes, and personnel. Then the degree to which audit evidence about the operating effectiveness of those controls was obtained, the length of the remaining period, the extent to which the auditor intends to reduce further substantive procedures, and the control environment. Okay. Additional audit evidence may be obtained, for example, by extending test of controls over remaining period or test the entity's monitoring control. So he can place the reliance subject to all these conditions, and based on that, he can decide his sample size. Clear? Any doubt? Okay. Another good question. Now, next one. Again, sort of a case study scenario. Okay. Opal Stones Private Limited is a renowned brand dealing in rare earth and precious stones. Management of Opal Stones Private Limited hired an expert to value their inventory of rare and precious stones. The company had the following stock of valuable gemstones. Okay, this was the stock. Tanzanite, they were having 3 quantities. Okay, of Tanzanite gem. Total carat value was 250. Valuation by expert per carat was 1500. Valuation by management per carat was 1600 US dollars, not the rupees. And I have the FX currency rate available over here. Royal Demetoid, total quantity 2, total carat value 120. Again, the rate was valuation by expert was 1800, but the management valued at 2200 per carat. Blue garnet, 2 quantities were available. Total carat value for 2 quantities was 100 carats. Valuation by expert 1700 and valuation by management 1900. Black opal, 5 quantities were available. Total carat value of 350 carats. Management valuation by expert per carat was 2350 and valuation by management was 2500 US dollars per carat. Unlike last year, when the expert's valuation was adopted, this year management decided to value the inventory of the gemstones as per the rate decided by them, which was based on the fair market value calculated by the management. The rates calculated by experts were based on the average rate fetched by the various companies in the industries in past 3 years for the sale of the same kind of gemstone. Okay, so the rates that were calculated by the expert were based on the average rate fetched by the various companies in the industries in past 3 years from the sale of same kind of gemstone. That was the rates calculated by the expert. However, management decided to value the gemstone as per the rate decided by them, which was based on the fair market value calculated by management. Okay. So management calculated fair market value. Expert rates were based on historical amount that has been fetched for those stones. And unlikely last year, the valuation of expert was adopted, but this time the valuation of management has been decided and adopted. Okay, fine. Mr. Akash, an audit executive from the audit team, inquired with the management with the respect to the rationale behind not accepting the valuation done by the management expert. Management explained that the estimate value per carat is based on the market value they can fetch. Mr. Akash requested management to provide the supporting documentation for the same. However, management could not provide any documentation to support the valuations. Management further explained that these are the assumptions which do not have any supporting documentation. And without these assumptions, one cannot value these gemstones as there is no standard methodology to evaluate. Number one, how do you test the assumptions made by management? What procedures you will perform to test the assumptions made by management? Come on, guys. We have discussed this previous also. Like one of the question was there in last to last lecture on the accounting estimate. Again, the same question on the same line. We have this question on the accounting estimate. How will you test the assumptions made by the management? Or are you required to test the assumptions? Are you required to look into the assumptions In the current case, management is saying that assumptions are assumptions, they do not have any supportings, because one cannot value these gemstones as there is no standard methodology to value them. Okay, that these assumptions, they do not have any supporting. So how do you test these assumptions? Or you shouldn't test these assumptions. What would you do in the current scenario? Would you test the assumptions or would you not? Because there is no supporting available. Come on, guys. How will you test the accounting estimates made by management? What you will do to test the accounting estimates made by management? Okay, good, Purvi. Well, come on, guys. I'm waiting for your answer. Do. Absolutely correct, Puri ma'am. Correct, Tushar. Come on, guys. I'm awaiting your answers. Come on. I'm awaiting more answers. How will you test the assumptions made by the management, the estimates made by the management, and the data which is used in the estimates? One such example, let's say, for example, like I'll give you uh, the nature of assumptions. What is the nature of the assumptions? Like, whether they are significant, whether they are minimal, whether they are that much relevant to the accounting estimates or not. One can be that example. Another example to assumptions is, you could say that, whether assumptions are the input or assumptions are the model. That is, we need to understand there's a difference between assumptions used as an input or assumptions used as a model. Here in the current case, management has not adopted the valuation done by the management's expert. Rather, the management has referred to the valuation done by themselves. Management has not taken the valuation adopted by the expert. Come on, guys. So let us see the answer. As per SA 540, auditing accounting estimates including fair value estimates and related disclosures, when performing the risk assessment procedures and related activities to obtain an understanding of the entity and its environment, including entity's internal control as per SA 315, the auditor shall obtain understanding of how management makes the accounting estimates and understanding of the data on which they are based, including the assumptions, the underlying accounting estimate, in order to provide basis for the identification and assessment of risk of material misstatement for the accounting estimates. Now, assumptions are integral components of the accounting estimates. Okay, matters that auditor may consider in obtaining understanding of the assumptions underlying the accounting estimate include, for example, that the nature of assumptions, including which assumptions are likely to be significant assumptions, whether that's a significant assumption, how management assess whether the assumptions are relevant and complete, that is, all the relevant variables have been taken into the account. Like, how can management decide the assumptions that management is using is complete, whether the applicable, where applicable, how the management determines the assumption used are internally consistent with the other assumptions used either in the similar account classes or in similar processes, whether the assumptions relate to matter within the control of management. For example, assumptions about the maintenance programs that may affect the estimation of asset useful life. In this case, assumptions can be like, the price they can fetch and how they conform the entity's business plan and external environment or matters that are outside for its control. For example, assumptions about interest rate, mortality rates, or potential judicial or regulatory regulations, or variability and the timing of future cash flows. The nature and extent of the documentation, if any, supporting the assumptions. Now, assumptions can be made or identified by an expert to assist management in making the accounting estimate. Such assumptions, when used by management, becomes management's assumptions. In some cases, assumptions may be referred as an input. For example, where management uses a model to make an accounting estimate. Through the terms input may be also used to refer the underlying data to which specific assumptions are applied. Okay, so management can use the assumptions as an data to input into the model, or management can use assumptions to derive the inputs for the model, or management can use assumptions as a model. Management may support assumptions with different types of information drawn from internal and external sources, the relevance and reliability of which will vary. In some cases, an assumption may reliably based on the applicable information from the either external source or from internal source. In case an assumption may be more subjective, for example, where entity has no experience or external source to which from which they can draw the assumption. So in that case, it becomes more subjective. Okay, so this is how you can look for the assumptions, test for the assumptions. Now, let's say, for example, in this case, we assumed that the management adopted the value of the gemstones based on their assumptions. What if the management adopted the value of the gemstones based on the expert's valuation? How will you test the expert's valuation? So if I told you that, okay, this is the expert valuation given in the question that has been adopted by the management, how will you test the audit evidence? How will you gather the audit evidence for the valuation performed by expert? So I'll pose a question here. Let's say, for example, alternate question. How will you test the valuation done by expert hired by management? Okay, what you will do, what procedures you will follow? when if you want to test the valuation which is done by expert hired by management. Come on, guys. Let's assume management adopted the valuation done by expert. This is a valuation done by expert. Okay. Management adopted, hypothetical example, let's assume management adopted the valuation done by expert. Like last year they did. What procedures you will follow to test the valuation done by experts? How will you gather audit evidence in the current scenario? I want answer with essay number, the name of the essay, number of the essay, and the answer. I want answer based on the essay number. Okay, good, Janvi. Okay, good, Tushar. Correct, Janvi. Good. Come on, guys. I'm awaiting your answers. How will you test or how will you gather evidence about the valuation done by expert? Correct, Purviben. Correct, Tushar. I want answer with essay number. Come on, guys. I'm awaiting for more answers. Correct, Tushar. Okay. As per which essay, as per which standards on auditing or essay, we will be gathering the evidence and following the procedures. Okay. Good, Tushar. Absolutely correct, Janvi. Come on, guys. As per which standards on auditing, we will be gathering the information. Correct, Purvi Ben. Okay. let me give you options. Okay. See how many of you, option A, SA 620, option B, SA 315, option C, SA 500, option D, SA 530. I gave you the options also. Options are also available. Now you just need to select one option. I have already received answers from Tushar, Janvi, Purvi Ben. I'll appreciate your participation, really. Guys, this is a very important topic. Again, standards carry huge portion. They are, they carry huge portion, and they are very important from the marks point of view also. If you see the number of chapters they cover, again, it's a huge, very important, and that's why we are going with this method, that we are discussing the questions and practicals over here rather than going for the theory, because we want that you should prepare before the lecture. When you are coming to the lecture, you can participate based on your preparation, and you can understand, then you will understand, okay, what is the basic scenario, how we apply the things that we are learning in the standards into practical scenario. Trust me, very, very important. Thank you, Purvi. Very, very important. Please participate as much as you can, irrespective of whether the answer is wrong or right. Don't think about as of now the wrong or right answer. Think about participation. Think about giving the answers. The more you will try to give the answers, the more you will improve your thought process around it. Because whenever we will give an answer, we think, we use our thought, we do what we give a thought, we process something. That is more important here, processing the things. Absolutely correct, Purvi. So whether you can get answers by your own or not, let's say for example, now you gave a wrong answer, doesn't matter. So when we will discuss the right answer, you will remember, okay, I gave the wrong answer because of this reason, but the correct answer was that. So the moment you will give an answer, it will get recorded in your mind. Okay, this was the answer, that was wrong. If it is a wrong answer, by that way also you will learn the correct answer. And if you gave the right answer, means you are going on the right path. Your thinking, your thought process, your thinking process, your analysis is correct. That's why I suggest, please participate. Only listening to the lectures, only listening to the discussions will not help you out. Thank you, Purvi. Absolutely correct. The wrong answers will also come into your mind. Okay, I gave the answer, this was wrong and this was right. It will get registered in your mind. That's why we participate. As I expect participations from everyone. The more you will participate, the more you will able to understand. Okay. So for the people, for the students who are saying option A is the correct one, it's not. For the students who are saying option B is the correct one, it is not. For the students who are saying option C is the correct one, yes, it's the correct one. And for the students who are saying option D, again, it's not correct. Now, why option A is not correct? Because it's not the auditor's expert, it's the management's expert. Expert was hired by management. If you see, Opal Private Limited, Stones Private Limited hired an expert to value their inventory. So it was management's expert. If it is a management expert, I'll apply the concepts given by the SA 500. And SA 500 specifically says that when you want to, when any information to be used as an audit evidence, which has been prepared by the work of a management expert, the auditor shall perform the following procedures for the purpose of auditor's expert, for the using the evidence and information for the purpose of auditor's purpose. Number one, I will evaluate. The competency, objectivity of the expert, appropriateness of the expert's work. Okay, I will evaluate the objectivity of the expert work. Okay, competency and objectivity of the expert. So you can say competency, capability, and objectivity. I have discussed in previous lecture also CCO, that you check for the auditors, management expert, that whether he is competent enough to perform the valuation, whether he has the necessary capabilities, whether he is objective in his work. Number two, I'll understand work of that expert. I will check the appropriateness of the expert's work. I will check the appropriateness of the expert's work as an audit evidence for the relevant assertion for which I need audit evidence. So what is the relevant assertion in this case? If I ask you, name the relevant assertion, what is the relevant assertion in this case? Come on, guys. For which assertions and for which relevant assertion I am looking the audit evidence in the current scenario, for which relevant assertion I am looking the audit evidence. For which relevant assertions I am looking the audit evidence. Absolutely correct, Tushar. Which assertion I am looking here? For which assertion the audit evidence I am looking here? For which assertion I am looking the audit evidence over here in this scenario? If I want to consider the work performed by management expert, what is the relevant assertion? Come on, guys. Correct, Janvi. Come on, guys. Which assertion I'm looking over here? For which assertion I'm looking the audit evidence? This should be very simple. Okay, Purvi. Okay, so the relevant assertion I'm looking here is valuation. Valuation is the one I'm looking over here. Why not completeness? Because see, when I want to ensure the completeness, I need to look for the inventories which are not recorded in the books of account. That will give me the comfort over the completeness. But when management expert will perform the valuation, he will perform the valuation of the stones which are presented to him. It could happen that there might be other stones which are not presented to him, and that in that case I need to ensure the completeness from that point of view, whether all the inventories which should be have been recorded is there in the books of account. That's something I will look for the completeness. Along with evaluation, someone can say, I am looking for existence of the inventory, that whatever stones which have management claims in the books of account are actually present, and when expert will value them by looking at them, he can see, okay, the existence is there, and then only he will be able to perform the valuation. So existence and valuation both can be there, the assertions for which I'm looking the audit evidence. Same way, physical inventory count will help me in the valuation also, plus kind of a existence also. On the same line, this is the case. On a similar line, we did a question in last lecture, which was on this one. Remember, there was again case study. There was an actual valuation for the employee benefits. There was a question, assuming Mr. Sushil decided not to hire Mr. Anand as an audit expert, but rather to review his work as a management expert. What are the areas? The same we discussed. On the same line, we discussed what he needs to do when he is reviewing the work of management expert. Similar at this, if it is a work of a management expert, then on the same line, we are required to look into the work performed by management expert. Clear? Any doubt? Any doubt? Okay. So let's take another question, if no doubts. When Mr. Akash inquired about a change in methodology of estimating the value of gemstones, management responded the methodology of estimates can be changed anytime, unlike accounting policies, and same is permitted by NDS 8, that is accounting policies, change in accounting estimates and error. Mr. Akash, satisfied with the response, did not perform any further procedure on the change in methodology. Mr. Kush, the audit manager, asked Mr. Akash to relook on the evaluation, the changes in methods for accounting estimate. Kindly guide Mr. Akash accordingly. Now you tell me, what is the requirement of the financial reporting framework, applicable financial reporting framework, which is NDS 8 with respect to changes in methodology for the estimates. Changes in estimate methodology for estimate. What is the requirement of NDSA? Bonus question. What NDS 8 says about changes in methodology or measurement basis basically. Instead of methodology, I'll use the terminology same, like on the similar lines. It's measurement basis. Okay, so let's say if this is a change in measurement basis of the estimate, what is the requirement of NDS 8? Come on, guys. What is the requirement of NDS 8 with respect to changes in measurement basis? Don't Google it, huh? Come on, guys, I'm waiting for your answer. Okay, good Janvi, good Tushar. Okay, good Pulvi Ben. Good Tushar. Okay. Now, whenever you are seeing a change in the measurement basis of an estimate, okay, whenever you are looking at change in the measurement basis of an estimate, first of all, you need to look into the requirements of the applicable financial reporting framework. Now, the question arises whether this change in the measurement basis, let's assume this is a change in the measurement basis, okay, whether this change in the measurement basis is change in accounting policy or change in estimate. So if I say this is a change in measurement basis, so first of all, I need to understand whether the change is in accounting policy or the change is in the estimate. What is the change here? So what is the change? Whether this change is a change in accounting policy or change in estimate. I have changed the measurement basis for estimate. Earlier, the measurement was done by the valuation. Now I am doing to the fair market value. Earlier, it was based on the historical cost. Now I am based on the fair market value I can fetch. So earlier, the valuation was done by based on the average rate fetched, so past data. Now I am looking towards the future data, the amount I can fetch. So there's a change in the measurement basis. Now, what is the requirement of NDSA with respect to the change in measurement basis? Is it a change in accounting policy? Is it a change in estimate? To audit a particular change, you need to first understand what is the requirement of my NDS, or here in this case, I could say applicable financial reporting framework. So this is my applicable financial reporting framework. So I need to understand the requirement of applicable financial reporting framework, correct? Now, I'm not sure how many of you went through the NDSA and looked into that, but if you refer to NDSA, okay, I'll show you. This is NDSA, okay. If you refer para 35 of NDSA, para 35, it says that a change in measurement basis applied is a change in accounting policy, not in the change in an accounting estimate. That means when you change a measurement basis, it's a change in accounting policy, not in the estimate. Okay. So in the current scenario, I'm saying that it was a change in measurement basis for estimate. So it's not a change in accounting estimate, but change in accounting policy. If this is a change in accounting policy, then I need to perform procedures accordingly. I need to check for procedures. And here Mr. Kush did not perform any further procedures. So what could be the answer? See, as per NDS 8, accounting policies and changes in accounting estimate, a change in the measurement basis applied is a change in an accounting policy and not in the change in accounting estimate. And when it is difficult to distinguish a change in accounting policy from a change in accounting estimate, the change is treated as a change in accounting estimate. But let's say I have given you, this is a change in measurement basis. So this will be change in accounting policy. Also, if there is a doubt, you can check as a change in accounting estimate. But as per SA 540, okay, when performing risk assessment procedures and related activities to obtain understanding of the entity and its environment, including entity's internal control as per SA 315, the auditor shall obtain an understanding of how management makes accounting estimate, an understanding of the data on which they are based, including whether there has been or ought to be change from the prior period in the methods for making accounting estimate. So I need to understand whether there is a change in the method from prior period. If so, if there is a change, then why? Whether it is in order to provide a basis for identification assessment of risk of material misstatement for accounting estimate. So I need to understand why there is a change in compared to the previous year. Am I audible? Hello? Ashok ji, am I audible? Okay. Okay. Thank you. Purvipin, I think there is some issue with the audio at your end because rest of the people can hear me. Okay, let's continue then. So this will be a change compared to the prior years. If there is a change, then why there is a change? In evaluation, in evaluating how management makes the accounting estimate, the auditor is required to understand whether there has been a change from the prior period. Okay, that is there. A specific estimation method may need to be changed in response to change in environment or circumstances affecting the entity. If there is a change in the circumstances or requirement of applicable financial reporting framework. In the current case, it's not the both. If the management has changed the method for making an accounting estimate, it is important that the management can demonstrate the new method is more appropriate. Here, the management needs to demonstrate the new method is more appropriate. But management was not able to demonstrate. Okay. Rather, management was saying that it is change in estimate and permitted by NDSA, so we will make it the change. No, it is responsibility of the management to demonstrate that the new method is more appropriate, or itself is a response to such change. For example, if management changes the basis for making an accounting estimate from mark to market approach to using a model, the auditors challenge whether the management assumption about the marketplace are reasonable in the light of economic circumstances. So auditor needs to challenge the management whether the change is appropriate. The auditor consideration of a change in accounting estimate or in the methods for making it from the prior period is important, because a change that is not based on the change in circumstances or new information is considered arbitrary. So if a change is basically not based on any evidence available on the hand, I could say arbitrary change. Now, if there is an arbitrary change in the accounting estimate, that would result in inconsistent financial statement over the time and may give rise to financial misstatement, or an indicator of potential or possible management bias. Now, an arbitrary change can result in inconsistent financial statements or may give rise to financial statement misstatement, or could be an indicator of potential management bias. And in that case, I need to evaluate why there is this thing. So, for example, in the current case, if I do not, if the management does not adopt the valuation by expert, rather they adopt the valuation by themselves, this valuation is on higher side. This is management bias. This could be management bias and could lead to even fraud risk. So I need to go and understand whether there is a management bias, okay, in the estimates. I need to test whether there is a management bias. If yes, then accordingly I need to perform relevant procedures. And when I talk about management bias, it's something, based on the you can say the management inclination towards a particular a particular estimate, or a lack of neutrality. That is the management bias. So auditor is also required to understand whether there is a presence of management bias or not. Okay, why management is selecting this particular valuation? Why not the valuation by expert? Very important. Okay, so the auditor shall review the judgment and decision made by management in making of accounting estimate to identify whether there are indicators of possible management bias. And indicators of potential management bias, they are not itself a misstatement, but they may be, they may point towards a risk of material misstatement. Clear? So hence, the auditor in the current case, Mr. Akash, in the current case, should ask management why there is a change from prior period. What is the reason for the change? He needs to ask further documentary evidence to demonstrate the new method is more appropriate. If there is no need to change in the method for making from prior period, if there is no need by the financial reporting framework also, then the change can be considered arbitrary if no information is provided. If there is an arbitrary change, the result could be inconsistent compared to the previous financial years, because I cannot compare. Till last year I was doing historical cost. Now I am doing fair market value. That is not appropriate. And accordingly, I need to test for management bias. Hence, Mr. Akash is not correct with respect to not performing any procedures. So Mr. Akash did not perform any procedure on the change in methodology. That is incorrect. And Mr. Kush is correct. Clear? Any doubt? Any doubt? Okay. Let us see the next question. For example, assuming the subsequent to the preparation of financial statement but before the date of audit report, management sold two blue garnets gemstone of total 10 carats at 1400 per carat, 1400 US dollars per carat. As an auditor, how will you deal with this information? Now, management sold two blue garnets gemstone at 1400 per carat of total 10 carats, and management valuation was of blue garnet was 1900 per carat. So management was able to sell 10 carat to blue garnet at 1400 per carat. How will you deal with this information? As an auditor, how will you deal with this? Come on, guys. Valuation of by management was $1900 per carat. So management valued in the books of account $1900 per carat. This is okay. This sale is after preparation of the financial statement. Huh? After preparation of the financial statement. So while preparing the financial statement, management took 1900 per carat as a valuation. But after preparation of financial statement, management was able to sell two blue garnet gemstones of 10 carat at 1400 per carat. How will you deal with this situation? Good Purvi Ben, good Janvi. Okay, which essay you will apply over here? Based on which essay you will provide your answer, basically, or in support of which essay you will give your answer. Two things. How will you deal with the information? Number two, under which essay? Okay, good Purvi Ben. Come on, guys. Good Janvi. Good Tushar. Good Tushar. Now, what you will do with this information then? Tushar and Janvi. What you will do with this information? How the auditor should deal with this information? How the auditor should deal with this information? Come on, guys. How the auditor should deal with this particular information? Okay, good, Tushar. Good, Janvi. Come on, guys. Okay. Can I say the information that I have received is subsequent to the preparation of financial statement? And if that information is subsequent to the preparation of financial statement, can I call this information and classify this information into subsequent events occurring after balance sheet date? And SA 560 guides us that how to look for the subsequent events. Okay. What SA 560 talks about basically? If you see SA 560, so SA 560 subsequent events. Okay. It talks about events between date of financial statement and date of audit reports. This is DOFS, sorry. Date of financial statement. Okay. So it talks about date of financial statement and date of audit report, events between both of them. So what it says that the auditor needs to perform audit procedure to obtain sufficient and appropriate all evidence for all the events between date of financial statement and date of audit report that require adjustment or disclosure in the FS. Okay. Then SA requires that auditor is required to obtain understanding of any procedures management has established to ensure that the subsequent events are identified, which includes, auditor is required to inquire with the management and those charged with governance with respect to whether there are any subsequent events, reading minutes, reading the entity's latest and subsequent interim financial statement. Okay, so these are certain procedures which SA 560 requires. Over and above that, SA 540 also requires certain things. SA 540 says that that in responding to assess risk of the material misstatement as required by SA 330, auditor shall determine whether the events occurring up to the date of auditor's report provide audit evidence regarding the accounting estimates. Means it says that apply SA 550, 560 and plus 540 plus 330 and check whether there are any events occurring up to the date of auditor's report that provide audit evidence regarding the accounting estimate. Means perform the audit procedures, see the audit evidence about subsequent events, and check whether they provide any evidence about accounting estimates. Then determine whether any events occurring up to the date of auditor's report provide evidence regarding the accounting estimate may be an appropriate response when such events are expected to occur, or provide an evidence that confirms or contradicts the accounting estimate. So in the current case, the evidence of the sale can either provide you the evidence to confirm the accounting estimate or contradict the accounting estimate. Okay, so this will help you to either understand whether I can confirm the accounting estimate or contradict. If I was able to sell at 1900 per carat, fine, my estimate is right. But now I am able to sell at 1400 per carat, means there is a contradictory evidence available to the estimates. Okay, events occurring up to the date of auditor's report may sometimes provide sufficient and appropriate audit evidence about an accounting estimate. For example, sale of complete inventory or supersede a product shortly after the period, and may provide evidence relating to the estimates of its net realizable value. The same we have in our example. In such cases, there may be no need to perform additional audit procedures on the accounting estimate, and provided that the sufficient and appropriate audit evidence about the events are obtained. So I am not required to perform any additional procedures. Rather, for this sale, what I'll do is I'll take the audit evidence about the event. Okay, when the sale happened, with whom, whether it was a related party, non-related party, whether the amount fetched is the same, or the two blue garnets which are sold are the same which are held in the inventory, or the similar blue garments are held in the inventory, something like that. Is the same product or relatable product. Okay, the price which is received is the fair market value, or is it affected by any other factors, whether the transaction is with the related party or not with non-related party, or is at the arm's length price or arm's length transaction, terms and conditions of the transaction, everything. I'll gather the audit evidence and I'll see whether I can compare it with the inventory which is lying in my books of account or not. Okay. In some cases, events that contradict the accounting estimate may indicate that the management has an ineffective process for making accounting estimates, or that the management bias in the making of accounting estimate. So if there is a contradictory evidence, then that can indicate that the process of making estimate is either an ineffective process or there is a management bias. Then in that case, auditor needs to understand what is the impact. So as per SA 560 also, okay, auditor is required to perform audit procedures designed to obtain sufficient and appropriate audit evidence that all the events occurring between the date of financial statement and date of audit report that require adjustment or disclosure in the financial statement have been identified and appropriately reflected in the financial statement. Okay, so in the current case, you are required to understand whether the event requires any adjustment and what is the impact of the event on the accounting estimate. Okay, so I will apply SA 540, 330 and 560, and I'll check whether the events occurring after the balance sheet date, how they are impacting my accounting estimates. Yes, Purvi. If you'll write about any other essay in the exam, okay, which is not relevant here, you might not get the marks. Let's say, for example, if you write about the SA 520 analytical procedures, that is not relevant here. Rather, the relevance is about subsequent events. So you need to write the relevant thing over here. See, if you write the wrong essay number, and if the content and if the things are the content is relevant, again there will be a deduction of marks, but that totally depends upon the content what you have written, whether that is relevant or not. Clear? Any doubt? Any doubt that how auditor will deal with this information? Okay. Let us see one more question. Very important. On the same line, same question, but with additional information. In continuation of the above question, Mr. Pramod, a customer of Opal Stones, filed a criminal suit against the management of Opal Stones on account of selling fake gemstones worth of 65 crores to him in FY 22-23. Mr. Pramod shared the forensic test report carried by an authorized government laboratory of fake gemstones with those charged with governance and auditors of the company. Upon receiving the report, the audit team hired the third-party independent expert to test the inventory on hand. Upon testing, it was identified that the 90% of the gemstones were fake, amounting to 55 crores as per the book value. So 90% of the gemstones were fake, amounting to 55 crores. The outstanding loans from the bank and financial institution was 25 CR as on 31/3/23, and the annual turnover of the company was 75 crores and 87 crores in FY 21 and 22. FY 21-22 and 22-23 respectively. Kindly explain how will you report the said fraud in the audit report. Also explain reporting of the fraud required to be done other than the audit report. So where you will report this fraud within the audit report and outside the audit. Now 90% of the gemstones were fake, valuing of 55 crores as per the book value. Now see the inventory value in comparison of the turnover. So if you see the comparison of the inventory value in front of the turnover, it is a very material. Where you will report this fraud in audit report and outside audit report. Come on, guys. Where you will report, how you will report. First, how you will report in audit report, how you will disclose the said matter in the audit report. Number two, other than the audit report, where you will report this thing. Okay, Janvi, good. The first thing, so the first point of the reporting in your answer, you should look onto that, could be different, but rest, everything is correct. Come on, guys, where you will report this, how you will report in audit report, and other than audit report, where you will report. With detail, huh? I need, if you are giving an answer, I want everything in detail. Like detail in the sense, provide the reference of essay or any other applicable, thing which is on the basis of which you will report. Okay, Tushar, good. Okay, Pruvi Ben. You need to code SA number also with your answers based on which the reporting in the audit report is required. January, that you need to decide. Come on, guys, where you will report and how will you report an audit report? See, I know I will report an audit report that I will issue. I will disclose this matter in the audit report. But how? That is very important. Number two, other than audit report, where I will report this issue. No generic answers. Tushar, somewhere your answer is a bit generic. I would say make it more specific. Very important, trust me. Kind of not happy with the answer that I'm receiving. Not happy. No, Tushar, sorry. No, guys, not happy with the answers. Sorry. See, I have a 90% of my inventory fake, which has an impact of 55 crores in my books of account. My turnover is 75 crores. So, impact of 55 crores in my books of account. Understand from that point of view. In front of the, turnover, what is the impact? No, sorry, wrong Puri. No. Good, Janvi, but that is partial question. I'll tell you. Okay, let me give you the answer. First of all, within audit report and outside audit report, I'll bifurcate two things. Within audit report, amount is material and the impact is pervasive. If that is the scenario, I will issue adverse opinion as per SA 705. And I will report this matter in in adverse opinion. Number two, as per SA 570, this raises a question. This is a material uncertainty. Okay. And I could also sense the use of going concern assumption is inappropriate. If that is the case, I will report in going concern paragraph. If I say no, there is a material uncertainty exists, okay, which casts a significant doubt about entities' ability to as a going concern to go entities' ability to continue as a going concern, okay, then I will report as per SA 517 going concern para. Yes or no? Plus, this is within the audit report. Outside the audit report, SA 260, communication with those charged with governance. If there is any circumstance that affect the form and content of the audit report, I will report to the those charged with governance. If I write communication with the appropriate authority, then it is wrong. There is no appropriate. I need to use the appropriate terms. I cannot write appropriate authority. I need to write communication to those charged with governance as per SSC 260 when there are circumstances that affect the form and content of the audit report, and if there is any other significant matter. SA 570 going concern, where if the financial statement has been prepared on the going concern basis, but in auditor's judgment, management use of going concern basis of accounting in preparation is inappropriate. I need to issue adverse opinion. If I issue adverse opinion, SA 705, accordingly, I need to provide the details of SA like modification, adverse opinion, basis of adverse opinion. I need to provide that. I need to discuss with non-disclosure with those charged with governance. Describe the basis of opinion section in the nature. Okay, unless prohibited by law or regulations, I will discuss the matter with those charged with governance. Other than that, section 143(12) of the Companies Act, read with rule 13. If an auditor of the company in the course of the performance of his duties of statutory auditor has a reason to believe that the offense of fraud which involves or is expected to involve individually or a number of rupees 1 crore or more, then in that case, I need to inform to the central government. So it is more than 1 CR. Fraud is of 55 CR plus 65 CR is already the sale which has been already made is a fake gemstone. So it's more than 1 CR by default. So 143(12) plus Caro para 11. Why para 11? D1 R10. That is paid up capital less than 1 CR, debt less than 1 CR, revenue less than 10 CR. If that is the case, then there is an exemption to small private limited. If that is not the case, then there is an exemption of small company, but both are not applicable because it's not a small company from the turnover side. It is not falling under the exemption of private company. Hence, Caro will be applicable. If Caro is applicable, then para 11 of Caro 2020, whether any fraud by the company or fraud on the company has been noticed or reported during the year. If yes, the nature and amount involved to be indicated. Whether any report under section sub 12 of 143 Companies Act has been filed by the auditors in form 84 under rule 13 of Companies Auditors Rule 2014. Whether the auditor has considered whistleblower complaints if received during the year by the company. So all these areas are there where the reporting is required to be done. If I just write reporting to appropriate authority, if I just write about discussion with the appropriate authority, reporting the C, which are incorrect. So I have received answer of reporting in EOM. That is incorrect. Discussing appropriate authority. Incorrect. Reporting as per SA 710. Incorrect. Okay. Disclosure under SA 701. Incorrect. This is not a key audit matter. Remember that. This is not a EOM or other matter paragraph as per 706. No, it's not. Obtaining written representations as per SA 580. Incorrect. Why will I obtain a written representation when the management itself is involved in the fraud? There is no credibility of any written representation, and what audit evidence I will gather by obtaining written representation when there is a fraud? If you are given any of the answer, it's wrong. Clear? Clear? How do you report the fraud of this nature, of this amount, in the audit report and outside the audit report? Any doubts? I will suggest that Tushar, Purvi, Jani, thanks for trying. Reason because now you will remember that if some similar questions comes into the exam, you will be able to clearly, apply and think, okay, last time I gave this answer, but that was wrong because of this reason. This was the correct answer. Now you will remember. That's why I suggest please participate. And thank you for participating. I'll thank Tushar, Janvi, and Puri Ben. Any doubt, guys? Any doubt? Okay. If no further doubts, then in the next lecture, I will be taking up SA 600 series. I request please watch the lectures, read the study material, and bring your doubts and participation. Bring your doubts and participation, okay, in the next lecture. So that will be helpful for you. Okay, I will be coming up with more questions on SA 600 series. It will be mixed of everything, basically around SA 600 series. Okay, we will be discussing that questions, that topics and everything. So please be prepared before next lecture. Okay, if no further doubts, then thank you guys. Thank you for joining the lecture. I'll see you in the next class. Thank you, Ashok ji. You can conclude the session.